Hi, trader guys and gals. This is Martin here. Welcome back to another resounding rendition of the weekly forecast. That's coming up for the week of October 17th to the 21st. So that's this week coming up, and we're going to take a look at trading opportunities, some of the interesting insights I may have, and we're going to definitely look at the different levels and see where you could possibly get in to open up some trades. This week, I'm looking at the USD currency. Last week showed that the USD currency was quite strong. It was leading the way, and perhaps the US currency is going to be keep getting stronger as the weeks go on, perhaps leading to another interest rate hike by the US Fed. So, if the US currency keeps getting stronger, then there could be a good inclination to raising the interest rates, and that's something that we could look forward to perhaps in the December economic news that may be coming out. So let's take a look at the currency charts. And as always, we start with the Euro USD. Okay, here you can see the Euro USD daily chart, and you can clearly see that we are in a downtrend. Price is below the 50. Here's the 50 simple moving average. Okay, that's the first thing that you always look at. So always look at a pair. If it's trending, you're in an uptrend. If price is above the 50, you are in a downtrend. It's below the 50. And because we are in a downtrend, we are looking generally at selling opportunities, which means selling with the overall trend. Okay, here the MACD shows that the blue line, which is the MACD line here, is below the zero. So we are in a seller's market. Okay, and that's important. We're in a seller's market looking for sell trades. And here you can see on Friday, last Friday, we had a huge bearish engulfing candle. I expect price to go lower to this to the next support. I'm sorry, this is a support area right here in the gray rectangle. Take a look at your immediate left. You can see there's the most there is the swing low right there, and so price most likely is going to keep going lower, and then I expect a bounce. So for all you traders that are sometimes looking for bounces off support or resistance, in this case support, you can place a buy stop. I'm sorry, a buy limit order at the lowest point here, or just below, or just above, or just wait for price to come down. Look for then you can look for bullish evidence to the upside before taking a buy trade. But that's what we're looking at. The price should be going down lower. Okay. Last week price dropped by 216 pips. So from here, it was great opportunity to make some pips. And indeed, last week I did say, wait for a breakout below the trend line. I actually had a trend line drawn in right here. Wait for a break below the trend line, which was with this candle. You could have made quite a number of pips. So that was good for 145 pips with my last week's recommendation. Okay, now we get to the British pound USD daily here. And you can see again we are in a downtrend. Again, price here is below the 50. You can see here's the 50 SMA. And we are also in the seller's market. The MACD blue line is below zero. We are in a seller's market. So we're looking for sell trades. So what does that mean? Well, we can look for a breakout below this level right here. And that is below the one. Uh, Let me just take a look here. Let me get my crosshair. Okay, so you're looking at a break then below this area, 2000, 2000 level right here. Break there. If price is going to go down, I actually expect price to come down a little bit lower from here, but bounce up. So now you can look for a buying opportunity, and you could place a buy limit order or wait for bullish evidence. That means waiting for price to come back down and then looking for a bullish white candle to go higher and then getting in right after that, or looking for price. See right, breaking out above this. See this white little candle right here, waiting for price to break out above that to go higher. Again, that would be a counter trend move. Okay. Now, last week we had, price drop by quite a bit. Um, and in all, you see this red line here? This red line indicates the close of the previous Friday. So here with this big candle drop, this was Monday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Let's take it out. 1, 2, 3, 4, 5, 6. Okay, I'm sorry. Let's move the red line. There we go. Okay, so this is the close on Friday. So here we go. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday's trading. This is what happened last week. And last week, price fell about 357 pips. So that was a pretty good decline and loss for the British pound. Okay, again, some great trading opportunities. I did say sell below 123.70 last week. That was in my last week's weekly update. Sell below 123.70, right about there. And that would have been good for about 260 pips, I believe. Let's see, 123. Well, yeah, 123.70. Yeah. So yeah, it was good for about 260 pips. Okay. So that's the British pound USD. Now we get to the Australian USD daily, and you can see last week price did drop down. It did bounce up. You can see this pin bar right here, and then with this candle on Friday. So it was, some pretty good bounce off the support here with the green line. We are contained within a rectangle. You can see the magenta line on top. The green line below, this is a rectangle. So price is basically going sideways, and you basically have to wait for further evidence. You could take a buy trade right above the high of this candle on Friday, and that means buy above 0.7650, 7650 above there. But caution, we are near resistance, or just wait for a breakout above this previous swing high. Okay, so let me bring the crosshair tool. Here's the previous swing high, and so you're looking for a breakout close above 0.7710. I would say 7720. Okay, and then price would go higher. But right now it seems like price is going to be going sideways. We're contained within this rectangle. Okay, now. And again, the Australian USD is tied in heavily to gold. Price is just going sideways, as you can see here. Gold also, take a look last week. The look at this. Gold has been in a sideways range, so it's been range bound. Price so far is held below the 200. This dashed line is the 200 SMA. So as long as price stays below here, and I've drawn the upper resistance area in the magenta line or the red line, you can see if price stays below that, price should continue going lower. My bias is actually to the downside, but again, I want you to take a look at something really important. Take a look to the swing left here, all the way to the left side of your chart. You see this huge candle? Okay, this is a huge clue, and I'm going to draw in a rectangle right there below. Okay, see what I've done? Okay, so this huge bullish candle just at the base of this candle represents major key support. Okay, so that's why price has gone sideways here. So we've gone down, up, down, and price would really need to break below this green line here for you to take a sell trade. So right now you have to wait for further opportunity. Don't really do anything if you're placing any orders on gold or using this gold as a filter or as to help you understand what's happening with the Australian USD. So if price breaks above this line, then the Australian dollar is going to increase in strength against the US dollar. If price here on gold breaks below the green line, continues going lower, then the Australian US dollar will come down in price. In other words, Australian dollar getting weaker, the US dollar getting stronger. Okay, now we head off to the New Zealand USD. Let's take a look, see what's going on. Okay, last week I did say this pair was probably one of the better pairs to watch for a trade, and I even recommended taking a sell trade. In fact, that would have been good for about 85 pips because I did say last week, wait for a candle to close or price to go below the 100 SMA, and I did say wait for the candle to close below the 100 SMA, which is this blue line. Do you see that? Okay, so with this candle close, taking an entry order right at the open of the next candle, which is right there, that would have given you at least 93, 96 pips. You can see that with my crosshair. It's the middle number, 98 pips. If you would have just closed it on that day, but again, you would still be in profit if you would have waited. I believe price is going to go down further. My bias is definitely toward the downside. I still think this is a good sell trade. You could take a sell trade right now, or wait for a breakout below. You see this right here? Below these white candles. You can take a sell trade below 70. Let me just take a look. 70.30, I believe it is. Yeah, 70. So sell trade below 0.70. 30. Take a look at the right side of the price axis right there. You can see. Okay, so right there, and that's what this arrow indicates. By the way, these arrows on these charts are to help you. It's telling you what I'm looking at. I'm looking where price goes, and then possibly looking for sell or buy trades at those levels. So you can see the arrow right here starts right below this candle here, and so price gets here. You can take a sell trade. Again, you can wait for price to come up higher and then take a sell trade if price retraces. We are in a retracement right now, a slight pullback, but because we had one black bearish candle on Friday, I believe price is going to continue going down lower to at least this area of support. Take a look to the immediate swing left. You can see the swing low right here, and that is where price is headed, I believe. Also, you can see the 200 SMA is coming up to meet with this major support area in the pink right here. And the 200 SMA acts as a magnet. Price at some point will be drawn right to the 200. Okay, and that's the level that you have to watch next. Now we get to the US CAD. Let's take a look here. US CAD, as you know, is tied into oil. Well, the Canadian dollar is tied into oil. And last week, the US went up. You can see this is on a daily chart. So price bounced off of the support right here. And then went up to the resistance and then bounced right back down. And here you have to kind of just wait. This price is really going sideways. You're waiting for this pullback to end. So again, waiting for price to come down lower to here, and then bouncing back up higher. Okay, or waiting for price to come all the way down to this long-term green trend line, bounce coming down and then bouncing higher. So take a look at your take a look at your left here on the chart. You see price came down to the green line, bounced higher. Price then came down again, retested this long-term uptrend line here in green. It bounced higher. So price could again come down to here or come down lower and then come back higher again. Okay, so this is a wait and see situation. You don't want to take a trade right now. You can also wait for a breakout above this gray rectangle, which is key resistance. Okay, you can take a look at taking price goes higher, then you could look for a buy trade. Okay, now we get to the oil really quickly. Here's oil. And you can see oil has been in a retracement. It did reach a high on, let's see, 5 days ago. So really the Sunday, Monday trading, the price of oil went high. Now we're at resistance and it's come back down. Um, so a price could come back down to this next major support area in gray, and then you could look for a buy trade higher. Or if price breaks this previous swing high right here, then price is going to go higher. So again, those are the trading opportunities to look at. Right now, we are in a buyer's market. Okay, first of all, we're in an uptrend. Price, you can see, is above the 50, so that indicates we're in an uptrend. Yep, it's as simple as that, guys. If price is above the 50, we're in an uptrend. If price is below the 50, we're in a downtrend. Now, it doesn't mean that price is going to continue going down or up just because price is above or below the 50. But it does increase your odds when you say that because we are in an uptrend, we're only going to look at buying opportunities with evidence. You always have to have evidence to support your decision for trade. Okay, and here you can see where we are also in the buyer's market. However, we are retracing right now, and that's why I say expect price to come down lower. Then you can look for a bounce off the support here. Okay, now we get to the US Swiss franc. This was a great pair last week, right? Look at that. This is the close on the red line depicts the close on the previous Friday with this black bearish candle. And you can see right away Sunday, Monday, we had a huge bounce up. It closed above the 200. I would have gotten in right there, and bingo bango, you would have made quite a number of pips. As a matter of fact, last week I did say, and this was in my recommendation, wait for pullback to end, then look for a bullish candle. And that indeed did happen. And when I let's just repeat that. So wait for the pullback to end with this black candle. Okay, that depicts the pullback. Okay, the end of the pullback is when you see another huge bullish candle. That's the evidence to the upside. So now we have reversed the pullback, right? The black candle down, the white candle up. That's the reversal candle we're looking for. Getting in at the open of right here at the open of the next candle was good for about 86 pips. Okay, so right now for this week, we are still in a buyer's market. Again, I'll repeat, buyer's market because the MACD is above the zero. We are in an uptrend. Price is above the 50 SMA. And so I expect price to go a little bit higher. Caution though, we are near resistance with this rectangle. So you could take a short-term buy trade just above this high right here, and the short-term buy would be above the 0.9915. Okay. So the last pair that we're looking at is the USJP, and this is terrific because again, the uptrend continued last week. You can see this red candle here depicts the close on the previous Friday with this huge black bearish candle. Again, the black candles on the Friday, that was because of the non-farm payrolls, which wasn't that good for the U.S. But since then, price has rebounded. Price seems to be going higher. My bias is to the upside. Price right now is above the 50. Okay, you can see the 50 moving average, and MACD is above zero, so we are in the buyer's market. So look for buy trade right here above the highs here, and so you're looking for buy trade above 104.60. 104.64 buy trade, or you can wait for price to continue coming back down in a pullback. We are in a slight pullback or sideways market right now, slightly sideways, but because we had this bullish candle on Friday, I would expect price to just continue going higher. This could be one of the better opportunities to trade because like this pair here, because look at the open space, right? Uh, Once price clear, take a look at the previous swing high here, previous swing high. Once price clears this area, then price has got a long way to go, and let's do that right now. I've got my crosshair tool at the base of this arrow. Okay, so once price crosses here, we're going to go to at least, take a look at your left, at least 269, 286 pips. You see the middle number, okay, on my crosshair tool. And if it breaks that, it's going to go all the way up to here, 302 pips to the 200 moving average. Okay, so that's what I see for this week. So the name of the game is let's watch the U.S. pairs for currency strength. Will the U.S. pair keep continuing gaining strength? I believe it will, and that means the currencies trading against it are going to get weaker. So um, there you go, guys. This is what I'm looking at. Have a good trading week for the week of September to the 21st, and we'll talk to you again soon. If you have any questions, please feel free to email me anytime, and you know that I will get back to you as soon as I can. So take care, guys, and we'll talk to you again soon. Bye for now.